Welcome back. This is my rental property journey from the beginning. I'm Nick and this is episode 2. So as I promised in episode 1, I'm going to walk through and summarize sort of my strategy so far. Again, I didn't want to jump into the market and start submitting offers before I felt 100% confident and ready to. So I want to sort of explain what my process has been and how I got to the point where I was 100% confident and ready to. And what that entailed was doing a ton of homework, identifying risks and making an effort, a real effort to mitigate those risks as best as I possibly could. So I'll walk you through what those risks were that I identified, what my mitigation plans were, and what my general approach was from the beginning to today. Before I do, however, I did want to take a brief moment and look back to episode 1 and maybe clarify a little bit more about who I am and what this channel is all about, since I don't know that I made it perfectly clear in episode 1. So we'll go back, revisit a couple of those things, and then we'll get into the episode. So I'm in my late 30s. I have a full-time career in corporate construction. I work for a multinational technology firm where I manage their interior office fit-outs. I'm married. I have 2 young daughters. I have a real passion for investing. I also have a love for real estate, so it makes sense to sort of marry the two. I always knew at some point I would be getting into real estate investing. It was just a matter of when I felt confident, when I felt like I was ready to. And I sort of put this plan in motion years ago, and I'll describe that briefly in this episode. I'd say it was at some point in 2017 when I really realized I was in a good enough position financially to begin my real estate investment journey. Now fast forward to today in 2020 when I finally feel ready to take the next step into actually submitting offers and trying to make a deal happen. Now I, like so many others, really enjoy and find value in watching YouTube videos of all different topics, and I've certainly watched my fair share of those focused on real estate investment. You know, Graham Stephan, Meet Kevin, Ben Mala, even certainly biggerpockets.com. All fantastic content, very smart people, very successful in their own right. But I always felt like there was something lacking. It was always as though, you know, this had already been done and they were looking back on their career. And I thought it would be a great thing if it was actually somebody who was in the midst of doing it who was creating that content and sort of walking you through every step of the way instead of sort of retrospectively explaining how they had accomplished what they accomplished. So sharing hard lessons learned, strategies, ideas, real-time analyses on different properties, sort of that A to Z from receipt of a potential deal all the way through to execution of the deal and stabilizing with the rent with a tenant. Even better yet would be a channel created by someone like me, a career family man with very little spare time who was just about to begin this journey and was willing to let others join him along the way on YouTube. All of these things and more are going through my head, and I kind of had this moment where I realized, well, maybe I should make my own YouTube channel. I think that would be a lot of fun. It won't be easy, it'll be challenging, but I enjoy challenges, and it was sort of then and there that I decided I was going to make this YouTube channel. So not only would I have my journey fully video logged and in an organized way, which if this turns out to be a successful and life-changing venture, then how badass would it be to have that fully video logged and there for you to look back on and appreciate that much more. Also, the potential to maybe help people along the way is also extremely appealing to me. I like helping people. I think this might be good content for people who are in my position, getting ready to just start their career, and they can kind of see somebody starting that and how they managed and navigated the early years, the early days really, and months of their real estate investment career. All of that coupled with the fact that maybe I can even grow some subscriber base and actually manage to make $1 or $2 on YouTube, that also wouldn't be a terrible thing. So that's it. Hopefully it's more clear now. Feel free to go back and look at episode 1 if you want to get a little deeper dive into who I am and what I'm here for. But with that, I think let's get into episode 2. So earlier I mentioned 2017 is when I really started in earnest efforts, but really it started years and years earlier than that. Real estate investing has always been in my long-term goals. I'm very big on investments. I hate holding cash. Having excess amounts of cash in a way makes me feel lazy, makes me feel anxious that money's not working for me. Instead, it's sitting in a savings account not earning anything. I always try to keep every penny I have working for me in some way, shape, or form, anywhere but sitting in a savings account or sitting in cash and not doing anything. So even my 6-month emergency fund, is in an easily accessible, relatively liquid investment account that I can get access to if I need to at a moment's notice. So this mindset, along with my love of real estate, really sealed my decision to purchase rental properties. And this was probably back in 2008, 2009, when I saw all of these buying opportunities everywhere, but I was unable to act on them. At the time, I was sort of new in my career. I was recently graduated from college. I was pursuing my master's degree from NYU in construction management. And I wasn't very well capitalized at the time, so I couldn't take advantage of all of these opportunities that were in the market. And it was at that point when I said, never again. The next time there were opportunities available like this, I was going to be prepared and I was going to be able to take advantage of it. So I started saving and investing and researching and budgeting. And even though since then I've had a family, with all those efforts of making sacrifices and budgeting, I've been able to do pretty well year over year in terms of building my net worth, building my investment capital to the point where I can confidently go into real estate investing knowing that I'm not putting my family in any unnecessary risk. So that was really step one. It was me setting a long-term goal and me working towards that goal rigorously and without exception. Budgeting, sacrifices, my own self-education in terms of learning how money works, learning how the economy works, and really learning the nuts and bolts of the real estate industry and how all of that comes together and who the different players are and who you need to have on your team in order to be a successful real estate investor. And now this is the long game. It took me over a decade just to get to the starting point after I had decided that real estate investment was something I wanted to do. Now, again, I have the capital to invest while not putting my family in any unnecessary risk. And in the time it took me to get there, I've been learning the real estate industry. I've been reading books, watching YouTube videos, watching movies, speaking with experts. In other words, I'm finally ready. I'm finally at a point over 10 years later where I can go and submit offers on homes. So far, I've taken very little risk on. I own my primary residence. That's about it so far. In terms of real estate investment, what I've done so far is I've identified a couple key risks and I've developed mitigation plans around those risks. Really at the forefront of my mind is the financial well-being of my family. To that, the risks I keep my focus on are one, a loss of one or both of our household incomes, and two, realizing a large loss on an investment. Now, risk one was really my first priority, and the mitigations were simple. First, I looked to become an indispensable member on a team in a great company with a great track record of success. Now, in my career of 16 years, I've made one employer change, and that was because I was able to find an opportunity that I felt was less risky than the one I was currently in. Second, I always made sure I had easy access to at least 6 months of his emergency funds. Now, this was just a matter of time and discipline to be able to build that capital reserve. But what was tricky here is not mistaking that cash or that reserve as a slush fund for other things, to buy a car, for taking advantage of another investment opportunity. It was always very clear between my wife and I from the beginning that this was our emergency funds only and was only to be touched as a matter of a last resort. And this leads me to risk two, which is the potential for realizing large losses within an investment. I've always followed a very simple strategy with my investments. When the share prices go down, I buy more. When the share prices go up, I buy less. So I inject a fixed amount of money every month. So that way, if the price goes up on my target stocks, then I buy less of them because I'm still putting the same dollar figure in every month. So when the price of your investment goes up, you buy less. When the price of your investment goes down, you buy more. It's as simple as that. Anything else, and you're starting to get into the point where you're trying to time the market, and you are at a severe disadvantage there knowing who you're competing with, the professionals, the traders on Wall Street, and you're just not going to beat them. No matter how good you are, no matter how much time you put into it, you're just not going to beat them. So why try? Very simple investment strategy, and it mitigates your loss. And always look to the long term. So when you're buying for long term, you never really care about what your investment value is today. You always know that you're taking a long view of it, and in the future it will work out. But in the short term, your purchasing strategy should just be buy less or buy more depending on what the stock is. Never sell, never realize losses, because in the long term, you will reap the benefits. And then the second mitigation to large investment losses is don't invest more than you can afford to lose in the short term. Limit your investments only to what you can afford to have tied up in the long term. Aside from my emergency funds and the fund that I've established for my real estate investments, all of my investments are illiquid and or strictly untouchable. The bottom line is, don't risk more than you can afford to lose in the short term, and don't invest more than you can afford to do without in the long. Follow this advice, live you within your means, and eventually you will get to the point where you can branch out into different investments such as real estate. So setting myself up financially was the first and most important thing that I did. Next, I had to select the markets in which I wanted to operate. I did want to stay within a couple of hours of where I live, so I found a great market with a favorable affordability index, low real estate taxes, and a high percentage of renters versus owner occupants. On a roughly $100,000 property with about $1,000 in rental income potential a month, you would need to keep your real estate taxes somewhere below $4,500 per year in order for the deal to make sense. And while I was able to find some prospects within 2 hours of my house, they were few and far between, and it was becoming very difficult to find that super attractive house that fit within my very conservative metrics that I was doing in my analyses, which I'll show you at some point in the future. But it was very hard to find one within that 2-hour bubble that really fit within my model. Again, not to say that there aren't any, I do find quite a few, but it's limited, and I did want to sort of expand my horizon and see what else was out there, which is when I decided to pick a second market and have it be more of a remote market. And what I had landed on, based on a lot of research, is out of state. Specifically where my wife's family lives is a particularly attractive market to me, in that all the things that I mentioned before, the affordability index, which is a very important thing, you should look that up if you're thinking about this. Real estate taxes are very low, and there's an extremely high margin or high ratio between renters and owner occupants in the area. The most attractive thing was, one, the real estate taxes are extremely low, and to make up for the fact that I'd be remote, I'd have some boots on the ground with ties to the community through my wife's family, who can help us manage and pick up some of the slack left by me not being local. So just to speak in a little bit specific terms, this particular market, the renters versus owner occupants was 63%, so it was extremely attractive. Usually local to me, it's more like 40% renters to 60% owner occupants. So 63% renters was extremely attractive. So with that, I had selected 2 target markets. I spent a few weeks analyzing potential deals with a spreadsheet I had developed to help me do my analyses, which, by the way, I do recommend you also do, either with your own that you develop or with somebody else's to help you vet the deals. However, I will caution you, it's extremely important when vetting these deals, using these spreadsheets, to be as conservative as you possibly can. If the deal metrics need to be massaged into place, then abandon the deal. It doesn't work. Don't fudge the numbers to justify submitting an offer. It's just not worth it, and you're going to lose every time. And along those lines, also do not fall into the trap of thinking that you can get this done with no money or little money down. Margins in this industry are already very slim, and over leveraging yourself and minimizing down payments will only hurt you in the end and your rental potential income. I suggest you target a return of at least 15% cash on cash. So put down as much as you can, but stay above that 15% cash on cash ratio. And when I say 15% cash on cash, that includes all of your income after cash flow, principal pay down, and property appreciation. And always keep your debt ratio above 1. So the further your debt ratio is above 1, the better, because this means you can more than afford to pay your mortgage every month. And to do this requires a larger down payment. So don't think that you can come in here with a 3% down and still be able to make a monthly cash flow, because it's just not going to happen, despite what you might hear on YouTube and elsewhere about no money down schemes and things like that. It just doesn't work. Do yourself a favor and make sure you're well capitalized going into this, because it makes your ability to cash flow that much better. So in parallel to researching my 2 markets, I decided it was also time to start building my team in both of those markets. Specific to each market, I began contacting lawyers, brokers, agents, contractors, politicians, town clerks, police departments, and local lenders. Lawyers, agents, and brokers, obviously, to position myself for deal making, and the cops, clerks, and politicians that I had reached out to, really just to have conversations with and get a better understanding of the local economies and the local markets in general. Really just good intelligence gathering on both the markets. Now, the local lenders were a trickier bunch. I was pre-qualified in my local market by brokers and lenders who I worked with in the past when purchasing my primary residences. So I simply reached out, explained myself to them, and they were able to give me very favorable terms right away and give me a pre-qualification for a mortgage basically at whatever amount I wanted. And those were all based on 30-year fixed at today's interest rates with no less than a 30% down payment, which is my own decision. It's not required. They did require at least 20% down for investment properties, but my decision was to go with 30% for all the reasons that I mentioned earlier. Now, my remote market lenders are proving a little bit more difficult. Smaller, more local lenders are very fearful of the word investment, and mere mentioning of the word triggers a whole bunch of additional requirements from the local smaller shop lenders. So the terms they were offering were not only much more risky for me, but also sort of stretched the margin a little bit. I mentioned earlier, margins in this industry are already very small, and when you start getting terms from lenders that include higher interest rates, balloon type structures, and shorter amortization schedules, it becomes much harder to cash flow a property and really get the returns that you're looking for. So weeks of negotiating with these lenders and proving myself to be an extremely strong borrower got me a little closer to where I needed to be, but in the end still fell short. But in that time, I've also discussed options with larger lenders who are willing to offer more traditional 30-year fixed term rates, notwithstanding the fact that it's an investment property, which they do see as a more riskier proposition than somebody purchasing their primary residence for obvious reasons. So I'll probably end up sticking with one of the larger lenders for my remote market and for my local market. They're just at this point giving better rates, giving better terms that I'm more comfortable with. At least I tried to use the local lender. If it didn't pan out, it didn't pan out, but at least I tried. So here I am. I have 2 lawyers in 2 markets. I have a financing plan in both markets, and I have a deal flow in both markets because of the contacts I've made with the agents and the brokers. I'm also personally well capitalized and personally well insulated from risk because of all the mitigation and planning that I've done up to date. So after years of preparation, sacrifice, planning, risk mitigation, countless emails, countless phone calls, I am finally happy to say that I am in a position to submit offers on homes. It only took me a decade and a half, but who's counting? So with that, I think I'm gonna wrap this video up. Stay tuned for episode 3 to hear about the first few offers I've made and how they went, how they were received, and what the outcome was, and for a detailed breakdown of the analysis I had done on the properties that I offered on. So thanks again. Every little bit helps get this channel going. So please, if you enjoyed the video and want to hear more, please make sure to like the video, comment on the video, and subscribe to my channel. And I'll see you next time. Thank you very much.